Welcome back. We've got a short week, 4 days of trading, but there was no shortage of volatility and action out there. We did get a relief rally and the market sort of breathed a bit of a sigh of relief. We're going to talk about basically the dominating factor in the market right now, which is the US, the war in the Middle East, Iran. So let's get into it. Hope you're doing well out there. I'm recording this on Friday morning, and we just got our non-farm payroll report, which we will look at as well. So this is the roadmap this week. So once again, one of the things we've been talking about as traders looking for opportunity is some type of washout capitulation. Everyone wants it, and that's why we're not getting it. So Monday, once again, this market to start the week, we did not get a big ugly gap down open. That would make things so nice and easy and clean for us. We instead got a gap up, but the market did sell off throughout Monday, and we did make new lows in this drawdown. Now, Tuesday came around, and it was a turnaround Tuesday because this was off the heels of sort of a de-escalation comments from President Trump. You also had the month-end sort of rebalancing going on here as well, quarterly, and then we had sort of a choppy Wednesday. And then on Thursday, when the president gave his his address to the union, he did kind of instill a little bit of fear, basically that it's 2 weeks out that we're going to be in this war still, but it's going to be an intense 2 weeks, and the market sort of didn't get the full reaction they wanted. But look at the price action. We gapped down to start the session, basically 2%, and then buyers drove us up to close the week. So a couple of things that changed. The tone of the price action certainly changed this week. We are getting opening on the lows, kind of closing on the highs. We are getting a relief off of the lows, and so there is a bit of a change of character here, but we do need to keep this in context. We're going to look at charts a little bit later and get more into that. Now, I want to talk about crude oil next because I do think this is a very important market now for us all to be paying attention to, because we want to understand sort of where prices are transacting and how long we are going to have higher input costs to the global economy, let's call it. So this is a chart here of the futures continuous WTI contract. $111 going out into the weekend. This chart was taken on Friday before the close, and we've got new highs here, new closing highs for the futures contract. Now, this is WTI. There is another, so WTI is basically the Texas US produced oil futures contract. Brent, which is more seen as the sort of benchmark that reflects the globe, let's call it, globe demand. North Sea sort of sea production is a different futures contract. Okay, it's a different product too, just a heavier product. And again, I'm not going to be an expert here or pretend to be, but you have WTI pricing, you've got Brent pricing, and then most equity traders are looking at USO ETF, right, which is using the WTI pricing. And so the reason I bring this up is because you have these layers of financialization on oil, but in the real world right now, you also have real buyers and sellers or producers meeting at a higher premium than even the futures contracts are representing right now. And so all of this is to say, one of the key things I think we should be paying attention to right now is the price of oil and what that general trajectory is. And we want to see less stress coming in on the economy, on the market. We want to see crude oil prices generally coming down. Just understand when we say crude oil prices, that could mean a whole different slew of things. And the pricing itself, the actual, are you talking real world transactions? Are you talking the futures contract? What contract on the futures expiration or delivery date are we talking about? So there are kind of multiple layers here, and it's good to, I guess, brush up on that if we are going to have to be, in this conflict for the foreseeable future, that we may want to just brush up on getting a little more specific when we're referring to the price of crude. So WTI here, again, going out at highs. I think generally speaking, oil at highs across all of the different flavors, let's call it, which is a problem. And this is definitely something we'll continue to hammer home here. We talked about it last week. So Biotech. This is a blog on Biotech. This is by Adam here, and we had a number of M&A kind of events here in biotech, and I do think we're going to see more like this. Biotech has been a place that I've been talking about wanting to just kind of maintain a position in. I think there's lots of tailwinds for lots of different reasons, but we had some good M&A this week in biotech land and at premiums, at just pretty attractive and good pricing. This is the chart of XBI right now. So XBI has been going nowhere, and you can see that we just finally got an uptick in volume here this week. This is a weekly chart, and you can see we really popped ourselves back to the top of this range. Now, the environment across, again, the more macro side of things is still kind of terrible. So I'm not saying this is a high probability breakout, but I think this is, again, just more strength here that just shows that this is pent up energy that wants to trend. It's just kind of stuck in a tough environment. So XBI, I do have a position here. Again, it's not as big as it should be in terms of a full size, but I like biotech just generally speaking, XBI, IBB, or you could go pick, your favorite individual company. Now, Friday, I'm recording this, the jobs number just came out here. It was an upside surprise. So the unemployment rate actually declined. We got more new jobs in March. So that is encouraging from the economic standpoint. But again, it's always a double-edged sword because a lot of folks are just, looking for Fed stimulus and Fed easing. And so sometimes these things are at odds with one another. SpaceX, another big one story this week, is setting the stage for their IPO. Looks like it's filed, looks like it's in progress. Numbers now seeing as high as $2 trillion. It's going to be quite interesting to see. I'm sure the demand will be there, but the subsequent trading afterwards could be painful. All really does depend on valuation. Space stocks, generally speaking, are enjoying it though and are rallying this week. Now, I can't go any further without shouting out our sponsor, Investors Business Daily. They help make these shows possible. We've got 2 discount links in the description of this video, so once you get done watching, check out IBD, Investors Business Daily, for their market surge and their online digital. And then any of the other prior few weeks, USO was the top of the performing list here, 11% up, but the Qs were up 4%, gold was up 3.5%, SPY was up 3.5%, even bonds, they were up 1%. It was green everywhere you looked. Now, here is not an April Fool's joke, but this is something I had posted on April 1st. If you didn't like how your portfolio felt the last 2 weeks, this is the perfect time to sort of rebalance and right size your risk when you get these relief rallies, because one of the themes that will probably be abundantly clear by the end of this video is that I don't think we're out of the woods here in terms of at least volatility in the market and two-way trading and more just uncertainty. All right. So I think these relief rallies are a good time to just rebalance and recollect your portfolio. Here's the S&P 500 index. This looks, again, exact mirror of the last 2 weeks. It was open at the lows, closed at the highs. It's been the total opposite here for the past few weeks. Take a look at this general sort of trajectory here. We've been trading lower in this channel. We're starting to, push our heads above it. We're getting a few consecutive days up. This is all nice to see. We were oversold. We were a bit stretched. We weren't in capitulation land, but it's at least enough of an excuse here for the market to rally. The VIX also came down pretty nicely. Don't forget, last week we closed over 30. This week we're closing around 24. Another comment I made on social this week was basically that we need to burn off hedges. When everyone is hedged in the market, it is very tough for the market to go down. When everyone has insurance, no one needs to panic because they have insurance in place. They have protection there to say, well, let it sell off. I don't need to sell my core holdings because I've already purchased the insurance. And so when we get these nice pops here in the market, it burns off the insurance premiums that people have owned. They either need to go out and re-hedge or they are left unhedged. So it's one of those two things. And that's why I do think there needs to be this kind of cleansing process that the market goes through. US dollar pretty much flat this week. Not too much to say about it from the index perspective. I mean, it's definitely volatile and moving a lot, but it's not changing the structure. It's still in this kind of immediate term uptrend. We did get a little bit of a relief rally here in treasury yields, 4.3%, still pretty elevated and still holding up. So it's nothing to get too excited about, but at least we didn't close the week at 4.5 and accelerating higher. Sector performance this week, everything was green except for energy. So oil had, USO ETF had one of its biggest weeks up in some time. Energy stocks, the exact opposite on the downside. So that is an interesting sort of divergence there, a few different theories on it, but we'll look at those charts a little bit later. Our smart trend filter indicator, materials, is the only thing now in a positive green bullish state. I did take a position here in materials. We'll talk about that a little bit later in the show. Energy we still like. That's still in the, on the good list for us, but everything else is really just kind of, in this messy kind of middle here that we don't have too much to like about. 52-week highs and lows, drying up still on the 52-week highs list. You can see these are numbers around 40 or 50. That's pretty low and shallow. If we look at the number of stocks hitting 52-week lows, again, you're not really romping and stomping higher, which is good, but you're still outpacing. Don't have too much to say here. Percentage of stocks above a 20 SMA no longer oversold. Take a look at this. Now 53%. So this relief rally is sort of resetting some of these oscillators that a lot of folks like to look at. Bitcoin here still going sideways, still hasn't made its move. 75 to 65. 65 is a big one. That's where you're going to want to see Bitcoin stay above, and it's testing it. Looks a little ominous to me, but I'm going to keep an open mind here and just see how this ends up resolving itself. Here is econ data for next week. We've got a lot going on. We've got CPI data, we've got consumer sentiment, ISM, and core PCE. So there's a handful of different economic readings that the Fed will love to have in their latest run of data. So let's get into some charts. All right, we are back. We've got some charts in front of us. Warden TC2000 charts. This is the S&P 500 cash settled market weekly time frame. You can see we did get the turnaround this week. 9.6% from highs. That was the extent of the drawdown here on Monday's lows. And so just shy of the big 10% correction level. And here you go. So we are back to sort of attacking the downtrend line here. We did not close above last week's highs, and we are coming back into this just general kind of zone here. We're kind of poking our head, testing it right now where we found lows in October, in November of last year, and we have worked off some oversold conditions. That's what it looks like to me. This is not an all clear signal, at least not yet. If we get a strong follow through next week, well, I guess that would start to repair a lot more damage and would start to put some distance between lows, and maybe we would have the probabilities rising that the lows are in and we are good. But I'm still a bit suspicious of it. It's not to say that you can't have long positions in this market. There are certain pockets still working, but I do think this is going to be a situation where we are chopping around trendless for longer than people probably want to see. I feel like the default sort of expectation right now in my head for markets looking ahead is sideways volatility for longer. Maybe that's months into the future here, where we're going to get these strong moves up followed by these strong moves down until we get some real clarity from the geopolitical side, and then earnings, of course, which we'll be starting to talk about next week or maybe 2 weeks, I think, for the banks to start to kick off earnings season, and we'll see where these profits start to come in. And if inflation, right, oil, I think, is just going to be on the center of everything. What does inflation look like here? And does it really delay the Fed or cause the Fed to hike this year? These are all these elements that I think are in play that the markets are going to grapple with. So here it is, S&P 500 kind of moving back up. Daily chart here, nice push off of the lows. We are 4% off of the lows. We're coming into some overhead supply, prior breakdown level, downtrend line. I would expect to see some resistance here, some hesitation by the market. Maybe we get another, kind of good test here, run into the 6650, 6700 zone, but I would expect to see some sellers start to show up there more aggressively in the S&P 500. If we look at the QQQ, we had a 12.65% drawdown from highs. So again, a nice kind of cleansing here in the market. It's been some time, but we did go sideways here. We have this top-ish looking pattern in the Qs. And notice we did get, again, a nice rally off of the lows over 5%, but we're still just kind of, not even at this breakdown zone. We're still coming below a downtrend line here. So there's work to do. There's more, damage to sort of resolve. I don't think we're there yet. We at least got a nice first step where the bleeding has stopped. And again, I do think you need to burn off those hedges and you need to get the market a little bit off sides here and shake things up, because if everyone is prepared for a drawdown and a crash, it's just, the odds are just much, much harder for that to actually happen. Now that we see the VIX starting to kind of come back down, we're seeing those hedges kind of burn themselves off. Now we need to kind of just pay attention to where all of these other catalysts and situations are going. If we take a look at the VIX here, again, 23 off of highs, still elevated, still above normal, and we'll pay attention to this next week because I think that's going to be telling. I think, again, 10-year treasury yields, broken record on all this stuff, but IEF, we're going to want to see this stabilize here. If we're going to get more comfortable in the market, we want to see crude oil prices coming down. We want to see 10-year treasury yields coming down. So that is something we will be watching. Here's USO going in at highs. Again, big volume, weekly chart. I mean, looks pretty explosive still, and this is where we'll want to keep a good eye on here. What else do I have? So let's look at some other markets. I want to look at XBI because we talked about that earlier. Here's the weekly chart. So this is where, again, you can find some pockets of strength, up 8% this week. On the year, this is up 6%. I still like biotech. I don't know if we're going to be able to break through this range right now and find immediate follow through, but this is a place where I do have some exposure. I'm trying to maintain some exposure here and hopefully build a position, but I'm not so convinced it's just going to run away right now. Semiconductors, I think, obviously are front and center in terms of just being a concentrated leadership group in this market. It's hardware. It's been working. It's been leading. Here is semis on the week, 4.83% turnaround. Nice tail here. Not a heavy amount of volume, but it did get back above this 375 zone. So I posted this on social, talked about it in the last video or so. I think to get this market to really sort of get slippery to the downside, the index level, Qs, SPY, you got to get, SMH holding and rolling below 375. We had one day of it, and then it was just a false, kind of failed breakdown, and we popped ourselves back up. So semis, unfortunately, this is a place I would love to build exposure. I do want it at lower prices. I'm not really willing to chase here. So, I would love to see this in the mid 350s, low 300s on a bigger correction, but I don't know that my wish is going to be granted. Let's talk about materials. So XLB, I took a position here this week. This is XLB. This is a follow-through week for XLB. So most markets here are turning around kind of week one. We did it, we printed an inside week up 4% last week while the market got hammered. And then XLB went up again this week. So this is kind of diverging a little bit. Here's the bigger, broader pattern. So a big sideways multi-year range. and it's trying to kind of leave the station right now. I like the space. I think you could get more specific on the types of material stocks, but generally speaking, this is acting well, showing some relative strength. On the year, this is up 11%, so much different from a sector performance return than the broad indexes. MU, we can talk about some individual specific stories. So MU is kind of at the epicenter here. It's trading a ton of volume. This is basically the best proxy on memory, DRAM, for the AI story, and we had a very sharp sort of 20 or 33% correction from highs, and this was after they absolutely crushed well above expectations on earnings, which was right at their highs, and then they sold off pretty aggressively to 30%. Obviously, I'm sure there was just a lot of positioning, fast money, dealer option runoff here that was happening, that was causing the move to spiral so aggressively here. Did seem to catch its footing. I think this could be just one to watch here. This was a big leader, still is a big leader, and still is up, 28% on the year. But again, for sentiment proxy and just understanding risk in semis, this is kind of leading edge. Micron could pay attention to that. And then of course Tesla had some delivery numbers on Thursday. They were below expectations, much below expectations, so they got sold off here into the end of the week and did not enjoy a nice rebound like the rest of stocks. And so kind of just in its own little universe right now. Mags, I still have a position here in Mags. I talked about this last week. I picked it up towards the lows here, a small starter position. I never added to it. I don't know what the future holds for this position right now. It's just kind of a token market beta exposure for one of my discretionary portfolios. My discretionary portfolio right now is kind of a mess with a lot of different things, but all very small size, and I have some short hedges on too. So I think this market has never been better for traders, for experienced traders. I think this is the market where individual stocks are presenting opportunities. You're getting two-way volatility. This is a great trading environment if that is your cup of tea. Again, if you don't want to deal with the headaches and all these short moves, then you're sitting on the sidelines waiting for the trends to come back, which again I think we do just need to be patient for. I think it could be choppy and sideways and volatile for longer. That's kind of one of my key takeaways. So I think that's everything I wanted to talk about. Let's look at how our trading systems are going through this. So our Galahad portfolio, this was updated for the end of the week, was down on Thursday. Our momentum portfolio had a strong session. This is our outlook here for the swing trading environment. We're still in a weak outlook here, right? Which is our lowest outlook. So basically this means higher cash, smaller position sizes, and dial the risk back. I still think that is the right approach. Next week, if we have a strong follow-through week, maybe this starts to get upgraded and we get more opportunity. You'll notice though, look at Monday's open. We have 6 new buy signals. So there is still no shortage of individual stocks that are breaking out, leading, or acting well. And I want to show you a few of those now on our watch list. Light, which has been a position we've been in for 44 days, closed the week at highs. So this is where, again, going underneath the hood, this is why I say individual traders can still find opportunity in this market. We're finding lots of individual stocks in kind of the technology, electronic components sort of pocket of the market that is doing extremely well and are still finding great strength. So light is one of them. I'm not necessarily advocating to go out and buy this now. This is, in a tougher spot to go chase, but I'm illustrating the fact that there were plenty of things that were working this week. PL is another example, not without volatility. I mean, this was PL this week. You had to stomach a move from 36 to 27 and stick around in it. So there's lots of volatility, which is why I'm sort of advocating for this smaller position sizes to be able to weather the storm right now. But 25 days in this trade, and it had this big move up on Friday. Again, SpaceX IPO, all of the space stocks or space related sort of stocks are doing well again and moving back up, as of course they would if, Elon can pull a $2 trillion IPO rabbit out of his hat. So that was one that was working. Sats is a new signal that we put on Friday. Again, telecom, electronics. This is where we're finding opportunity in this market. This is a beautiful pattern of a breakout. Again, I wish the macro was better to be able to put size on in this position and catch a nice swing, explosive move up, but do it in some moderation and you can still have a high cash, portfolio position with some individual swings. So Sats, I like this quite a bit. Flex, I've been talking about this one. I think this was 2 weeks ago. Still in it, still hanging around, still have a position here. So that's doing its thing. And then here's a brand new one for Friday, for Monday. This is a new signal that we will be buying on Monday. So this is Corning. And again, you can see technology, electronic components in the optical fiber space. And this is starting to, resolve up, try and turn up here. So this will be a new position for us. And we'll see if this one can act well. So that's it. That's what I have. It's still a difficult market environment out there. I don't quite see that changing as of right now, but there are still individual stocks that are performing. You just have to kind of get your hands dirty and be willing to tolerate a little bit of volatility. So know what is right for you. Thanks as always for tuning in every single weekend. We've got links in the description of the show to our sponsor, to our Galahad trading system, to our Rockets momentum dashboard. If you need some help, check those out. Have a great long weekend. We'll see you back here next Friday. Take care of yourself.